Hey, Peter Holtz, CPA here. I want to talk about Trump and his announcement of possibly an external revenue service, which is not the internal revenue service, but the external revenue service to collect all the tariffs on products coming into the United States. I think he's just trying to separate that out and making sure we get all the money that we need to get from the tariffs that he's increasing. I don't think income tax law is going to change, because some people have actually suggested that tariffs could replace income tax, and I don't think that's ever going to happen. Okay, we've never seen a part, at least in the last 100 years, where our government has said we want less money. Okay, the government is overspending as a matter of policy. We create bigger and bigger deficits every year, and they need to pay those deficits off. And one of the ways to do that is to create additional revenue for the government by the tariffs. Some people also said tariffs are going to cause inflation, and I totally, completely disagree. What they're going to do is balance the economic landscape, so our internal production will be more profitable than it has been before. We saw massive increases in tariffs when Trump was in the first time, and no inflation. Inflation was 2% when Trump was in office the first time. What happened is China adjusted and offset some of the tariffs by reducing their prices, and it created a more balanced flow of international payments between the two countries. So I really feel like tariffs are not going to impact inflation. I feel it's going to encourage people to reinvest in America and make America grow and bring manufacturing back into the country. And I think it's going to be immensely powerful from the perspective of a deficit. And the more money the government can collect, the less it has to borrow, then the more money is available for things like mortgages, right? And it's more money is available for things like banks to loan money to business, because the money supply is impacted by government borrowing, especially when it comes to long-term money. One of the reasons mortgage rates are so high today, even though the short-term rates are lower, is because the long-term rates for treasury bills are higher, and those are directly tied to mortgages. So I think what we're doing and the proposals that Trump is making are going to be very, very positive for the American economy. It's going to be positive for business, and it's going to be positive for the consumer.